gentlemen, good day and welcome to the Q4 and FY24 earnings conference call of ESAF Small Finance Bank Limited. As a reminder, all participants' lines will be on listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Viral Sanklecha from Orient Capital. Thank you and over to you, sir.
Thank you, Manuja. Good afternoon, ladies and gentlemen. I welcome you for the Q4 and FY24 earnings conference call of ESAF Small Finance Bank Limited. To discuss this quarter's performance, we have from the management, Mr. K. Thomas, Managing Director and Chief Executive Officer, Mr. Giri P., Chief Financial Officer, Mr. George K. John, Executive Vice President, and Mr. Hari Vellore, Executive Vice President. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainty. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. Without further ado, I would like to hand over the call to the management for the opening comments and then we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Virajji. Good afternoon. On behalf of ESAF Small Finance Bank Limited, I extend a warm welcome to all the participants on our earnings call to discuss the Q4 and full year FY24 business performance. Thanks to all of you who made time to be here and support us. With me today are some of my colleagues, Mr. Giri P., our Chief Financial Officer, Mr. George K. John, Executive Vice President, and Mr. Hari Vellore, Executive Vice President. I hope you all had a chance to check out our quarterly results and investor presentation that has been uploaded on the stock exchange and on the company website. With a dedication to predominantly serve the low-income and middle-income segments, ESAF continues to contribute to livelihoods and economic development, embodying empowerment, inclusivity, and positive transformation in every financial interaction. ESAF Small Finance Bank, along with its promoters, has over 28 years of experience in the Indian BFSI space, primarily serving the unserved and underserved. Before diving into our business update, let's touch upon the macroeconomic factors of last quarter. The Indian economy has been on a positive trajectory, followed by increased government spending and growth in manufacturing and services. GST collections saw a notable 111.7% increase in FY2023-24. While both manufacturing and services PMI remain in the growth territory, consumer demand has been robust, driving growth across sectors. The RBI maintained its interest rate at 6.5% with a focus on withdrawing support while slightly revising its inflation forecast. Looking ahead, India's GDP growth for FY25 has been revised upward to 6.8%, solidifying its position as one of the fastest growing major economies globally. The nation's economy stayed strong and steady, thanks to solid investments by the government, especially in things like building infrastructure and boosting local manufacturing, along with the steady growth of service industries. This quarter, economic activity kept moving steadily forward, driven by strong demand in cities and a gradual recovery in rural areas. Public sector investment stayed strong, giving a solid boost to investment efforts overall. Microfinance business continues to witness strong ground-level trends, being an under-penetrated segment still. We believe the business in this industry has more room to grow, mainly due to increasing number of customers coming in the purview of lending along with the growing appetite for credit among existing customers. Moving on to our operational performance, as on 31st March 2024, we proudly served over 83.7 lakh customers, with a significant majority being women. Our extensive reach and spans across 22 states and 2 union territories Notably, our gross advances to customers outside Kerala amounted to INR 12,503 crores, constituting 63.6% of our total gross advances. The top 5 states outside a home state of Kerala for gross advances, including Tamil Nadu, Maharashtra, Madhya Pradesh, Karnataka, and Chhattisgarh, collectively account for INR 9,830 crores, representing 50% of total advances. Our advances under management surged from INR 16,331 crores in Q4 FY23 to INR 19,659 crores in Q4 FY24, on the growth of 20.4% on year-on-year basis. Moreover, our commitment to accessibility is evident with 753 banking outlets and 614 ATMs, which are strategically located in these areas. In addition to this, we have 930 customer service centers operated by 35 institutional business correspondents and 5,024 banking agents. To conclude, I would like to express my appreciation for your continuous support. We are committed to sustaining our focus on growth, the quality of our portfolio, and operational efficiency with a strong financial foundation and strategic initiatives in place. We are well positioned for a prosperous and profitable future. With that, I will now pass on the call to Mr. Girish CP, CFO, to present the financial performance.
Thank you, sir, and good afternoon to all of you. I sincerely appreciate your presence for this conference call today. Let me provide you with an overview of financial performance for Q4 FY24 as well as for the financial year 24. We as a bank are focused on the unbanked and underbanked, particularly in rural and semi-urban areas. As of March 24, approximately 70% of our gross advances cater to customers in these regions, with 62% of our banking outlets strategically located there. Our key offerings include microloans, retail loans, encompassing gold, mortgage, personal loan, vehicle loan, MSME, financial institution loan, and agricultural loans. We take pride in serving these diverse segments with a commitment to financial inclusion and community development. Our gross advances reached Indian rupee 18,772 crores in Q4 FY24 as compared to rupees 14,118 crores in Q4 FY23, making a growth of 33% on a YOY basis. In Q4 FY24, the disbursement stood at rupees 5,266 crores as compared to rupees 6,043 crores in Q4 FY23. In terms of deposits, we witnessed substantial growth, climbing from 14,666 crores in Q4 FY23 to 19,868 crores in Q4 FY24, marking a growth of 35% on a YOY basis. We have strategically prioritized the expansion of our retail deposits, witnessing a rise from rupees 13,346 crores in FY23 to 18,368 crores in Q4 FY24, showcasing a growth of 38%. Highlighting the significance of current and savings bank accounts, CASA stood at 4,502 crores in Q4 FY24 as compared to 3,138 crores in Q4 FY23. The net interest income for Q4 FY24 stood at 591 crores as compared to 499 crores in Q4 FY23, showcasing an increase of 18.4% on a YOY basis. The net interest margin for Q4 FY24 stood at 10% as compared to 10.4% in Q4 FY23. The GNPA for Q4 FY24 stood at 4.8% as compared to 2.5% in Q4 FY23. The net NPA stood at 2.3% as compared to 1.1% in Q4 FY23. Provision coverage ratios for the quarter remained at 65.2% ROA for Q4 FY24 stood at 1.9% as compared to 1.6% in Q4 FY23. Return on equity for Q4 FY24 stood at 20.3% as compared to 19.4% in Q4 FY23. Profit after tax for Q4 FY24 stood at 43 crores as compared to 101 crores in Q4 FY23, mainly because setting aside an additional provision of 82 crores in Q4 FY24. For the full year FY24, profit stood at 426 crores as compared to 302 crores in FY23. Our comprehensive services extend beyond traditional banking, offering safe deposit lockers, foreign currency exchange, access to Bharat Bill payment system, money transfer services, and other Seva Kendra services. Additionally, we take pride in providing our customers with a diverse range of offerings, including distribution of third-party life and non-life general insurance policies and government pension products. In conclusion, ESAF Small Finance Bank is well placed for a bright future. Our commitment to serving the unbanked and underbanked parts of Indian demography remains unwavering. We will continue to invest in technology, expand our reach in the chosen geographies, and maintain a strong financial position to serve our customers better. We are excited about the progress we intend to make, and we appreciate your continued support. Thank you all, and we will go forward with question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akshat Kumar from Clay Group. Please go ahead.
Yeah, thank you so much for the opportunity and a very good afternoon. Just wanted to understand, sir, whether it's possible to share any, data or as far as the collection efficiency is concerned for the quarter.
Yeah. For the last quarter, the collection efficiency is 94.92%.
Okay, thank you so much.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Am I audible, sir?
Yes, yes.
Hello?
Yes, you are audible.
Okay, great. Thank you very much, sir, for the opportunity. So first up, I just wanted to understand, in terms of, even last quarter you mentioned about the stress in Kerala and Tamil Nadu, which largely forms about 60-61% of our loan book. So how do we see the problem there right now, or have we taken all the provisions, or in terms of regulatory requirements? So how do we see that going forward?
Yeah. If you recall, last time when we discussed this, we had said that over 2 quarters or so, we should be able to bring it back into some kind of shape. Mm-hmm. So that work is ongoing. If you see in terms of, if you're asking in terms of stress, etc., the situation, the stress in Tamil Nadu and Kerala, because of that, we had brought down our fresh loans, we had stopped fresh lending in some areas, etc. Those restrictions continue to be in place.
We have also taken all regulatory steps, provisions are being done, and over and above the regulatory requirement, there is an additional provision provided, 82 crores is being provided.
So 82 crores is additional provisioning as compared to regulatory requirement?
Yes.
Okay. Now we have brought down. So what would be our current share as of FY24? Would that be 60%, Kerala and Tamil Nadu?
Kerala is about, totally if you see, it's about 36%. Tamil Nadu will be around 21% or so.
So it has reduced, right? From third quarter it was close to 61%. Fourth quarter it has gone down to 57, 58%.
Yeah. If you recall, we have been giving some, very long-term rough plans, etc., where we had said, we would bring down Kerala to 25% and things like that. So we are very much on target in terms of those timelines.
In 2 years? You had mentioned in 2 years? 2-3 years?
Yeah, we have to 26, 27.
26, 27. Okay, understood. And how do we see the credit cost now? Now given the current situation for coming quarters or for entire year FY25, what sort of credit cost we might be looking at?
As Mr. Hari was highlighted, the stress is expected to come down after 1 or 2 quarters. So at this moment, we are unable to give a precise number about that. The current level of credit cost may continue for another 1 or 2 quarters.
So current level of credit cost may continue for 1 or 2 quarters.
Yes.
Okay, understood. And I think we have given statement earlier as a minimum 25% growth we are looking at. So that we are still holding on to this year?
We are still holding on to that. We haven't said 30%.
25%.
What we have committed is a minimum of 25, and that continues. Even this past quarter, we have exceeded that.
Okay. And just one final thing on the ROA front, is there any range we might be looking at this year? Or from current, I think what we did about 1.8%, right, in this year FY24 as a whole.
Yeah. We continue to have that kind of ROA.
So we will still be targeting, in spite of elevated credit cost expectation over next 2 quarters, we still be targeting ROA of 1.8% this year itself?
As things stands today, even in Q4, the credit cost was on the higher side. And since the cost side, the peak rates have already happened, we don't expect that much change from that level will be there. Even credit cost is at elevated level as of now.
So entire year 1.8% we might be looking at, right?
Yeah, that is our expectation.
A couple of other things also which we'd like to highlight. One is that we've been saying that we'll reduce the concentration risk in terms of microfinance, and we had said that again over by 26, 27 or so, we will bring down to about 60% of the book. Those things are still very much on course on the planned manner. I think in the previous quarter just finished, we would be in the region of 67 or something like that, 67% or so. The other thing which used to be raised with us is the CASA ratio, which has gone down to about 17-18% because of the huge, term deposit interest rates that was available in the market. So we've been saying that, this will come back and we have plans and we are on course. So if you see, we have closed at about 22.6% or so CASA for the financial year.
Correct. So in terms of NIMs, you expect a stable NIMs going forward?
Currently the NIM is around 10%. We don't see any significant change from that level. Maybe a marginal here and there change may happen.
Okay, and just one final query on in terms of election, because it's there in this quarter, do you see any kind of slowdown or, lower disbursement overall in any particular area or any particular, as on a pan-India basis?
In terms of election, on the collection front, we have not come across any major challenges on that. But because of the cash movement restrictions and all, disbursement of last little bit come down. But otherwise, business as usual is happening across India. So that shows the maturity of Indian democracy, what we are seeing. And also the formalization of the microfinance. Everyone understood the importance of financial inclusion and the microfinance. So there is no disruption at all at any level.
So there have been no waiver announcement also.
Yeah, that also. Yes.
Great. So overall, no disruption because of the election as such.
Yeah, not much. So here and there because of the climate change and all, some places the disbursement is a little bit slowed down. That's all.
Great. I think that would be it from my side. All the very best to you. Thank you.
Thank you, Deepakji. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Ravindra Patil, an investor. Please go ahead.
Many players in NBFC space have been guiding at weaker asset quality, and specifically in the rural space, leading them to create higher provisions than normal. So, since majority of our advances profile is a bit rural focused, so what has been our experience with both these loans, and is it also linked to the provisioning for this quarter?
Mr. Patil, we are not very clear. Could you be a little more louder?
So am I audible now?
It's audible, but it's not clear.
I'm disturbed.
So what I wanted to understand is, many players in the NBFC space have been guiding at weaker asset quality in the rural space, which is leading them to create higher provisions than normal. So since majority of our advances profile are rural focused, so what has been our experience with these loans? So, and is this also linked to higher provisioning for this quarter?
Yeah, in fact, we at ESAF Bank also is considering the stress as a major pain point, and therefore a progressive kind of provisioning we always resort to. So as of now, if you see from the regulatory minimum required provision level for the standard asset as well as for the NPA accounts, we are holding an additional provision to the extent of 282 crores, including the 82 crores which I have mentioned during our speech, which is provided during the quarter. So the additional substandard asset provision as per the board approved policy. So as a policy itself, the board has prescribed for a higher level of provisioning as the substandard moves on. The substandard unsecured loan requires a 25% provisioning, but we on a quarterly basis step up the 25% to 40%, 60%, 80%, and 100% when the NPA asset moves to doubtful category. So that way 158 crores provision we are holding, and the 82 crores which I spoke earlier is an identified assets we have provided that excess provision than required, and apart from that around 36 crores we have provided on the SMA advance funds. So all put together it is 282 crores we are holding additional provision.
Okay, got it, sir. Thank you.
Thank you. The next question is from the line of Rishikesh Oza from RoboCapital. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yeah, hi. Thank you for the opportunity. So my first question is in respect to the NII. Our NII has gone down.
Yes, the voice is echoing. Is it possible to say something?
Is it okay now?
Yeah, it's very clear.
So my first question is regarding NII. It has gone down quarter on quarter despite our loan book increasing. So is it because of interest reversal that we have taken? And if yes, so what would be the quantum, if you could please mention?
Yeah, if you see sequentially, there are a couple of aspects about it. The cost of funds on account of repricing of the existing deposit book the cost of fund is, inching up because of the, by around 1%. That is 100 basis point, it has moved on a YOY basis. So that is one reason. Second reason is that the slippages in the recent time has required the 90 days reversal of income as well. So these are the two aspects.
Okay, but what would the impact of that on the interest income? And could you also please mention the reason behind the cost of funds going up by 1% year-on-year?
Yeah, cost of funds, it has moved 1% over a 1 year period. And as of now, the repricing is almost completed. Now it is 7.39 for the quarter.
So, do we expect this to remain stable, the cost of funds from now on?
Yeah, because almost all the repricing has already happened, and last quarter we have reduced the rate by 25 basis points. So that way we think that this is the peak.
Okay. So our NII growth for FY25. How would that be in line with our loan book growth? If our loan book is to grow 20%, would it be fair to say NII will be growing 20%?
Yeah, more or less. Because that will have an impact on my asset combination growth also. So if at 25%, then 20% growth is almost, a good assumption.
Okay. And regarding credit cost, you mentioned the previous participant that our 2 quarters, the provisions would be in the similar levels, if I have got it correct. The provisions would be at similar levels, say around 180-200 crores?
Yeah. Because of the elevated slippages, the credit cost will moderate only after 2 quarters.
And what level should it normalize?
It will be around 2.5% to 3%.
Okay.
Thank you. The next question is from the line of Pritesh Baum from DAM Capital. Please go ahead.
Hi, sir. Good afternoon. Just 2 questions from my side. One is on employee expense that has been up 17% quarter-on-quarter. Any particular reason for that to be up?
This quarter, the actuarial valuation, there was a increase around 6 crores. So that is the only thing. And the other things are normal.
So the headcount also, how much it was? 6 crores.
Yeah, 6 crores.
But so if I adjust that 6 crore also, it still looks quite higher.
There are certain branch additions as well as employee additions during this quarter.
Okay, so it's also expansion related. Okay, fair. Second was on yield side. So we've seen a drop in yields. Just wanted to check if we have reduced any interest rate on the MFI book.
Interest rate has not undergone any major change. As we were explaining, it is because of the additional slippages require some reversal of income.
So that is all. Nothing from the MFI interest rate. So still, the interest rate on MFI, the new loans will be about 23-24%?
Yeah, that is right. Around that.
Got it. Okay. Lastly, just wanted to check on our off-book related growth. So overall, EM growth is doing fine, but any plans to also do a large chunk of off-book so that liabilities can get a benefit?
Yeah, we will evaluate going forward.
Got it, sir. Okay, thank you. Those were my questions. All the best.
Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Varun Mishra from Big Four Investment Partners. Please go ahead.
Hello. Yeah, hi, am I audible?
Yes, sir. Please go ahead.
Yeah, hi. Hi, sir. Good afternoon. I just had a couple of questions. So, sir, with regards to the recent RBI directive against the cash disposals of loans, I would like to understand what part of our disposal is cash-based and if this directive might cause any effect in our current operations.
We do not disburse loans in cash. Every loan is credited to a savings bank account of the customer. So the comment regarding the election thing was not about cash disbursals. It was a cash movement. You know, when elections are on, there are restrictions in the amount of cash one can carry on collections and things like that. It was in that context that this comment was made.
Okay, sir. All right. Yeah, and so we see a couple of domestic and foreign entrants in the microfinance loans recently. So how do we see them as a competition shaping for us in the near future, like in the perspective for 2 to 3 years coming ahead?
Some competition in foreign loans. So actually, we are pioneers in microfinance loans, and most of the geographies we are operating. We have got a vintage of more than 10 years. So that customer loyalty is still there. So we don't find any much. And as a banker, people trust the banks more to deal with, because they can, as their business grows, the bank will be able to support them in their growth phase, unlike a microfinance institution. So they are seeing that difference, and we are not seeing that any competition as a big challenge.
Okay, sir. All right. That's great, sir. Thank you so much, sir, and all the best.
Thank you. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Shaili Mishra from MNS Association. Please go ahead.
Hello, am I audible?
Yes.
Yes, sir.
Yeah. So, a couple of recent reports suggest banks, especially the public sector banks, have been facing crunch in deposit. And also the delta of advances and deposit growth is also widening for them. But we have experienced decent deposit growth for the financial year. So I want to understand what are the strategies we have employed to ensure deposit growth.
Yeah. Thank you for the question. Of course, you can't really compare us with public sector banks who have far, far larger balance sheets and things like that. And we have a smaller base. So the percentage-wise, that is not a comparison. But having said that, I think we did 2 or 3 things right. As you know, NR deposits have been a strength for this bank. And we've been having 25-28% of our deposits from the NRIs. That continues to, go up very strongly. We have maintained that kind of a proportion. The second thing is one of our biggest constituents has been senior citizens. That also has performed well, and we continue to get strong support from them. Third, we've been acquiring new customers to the bank at a very good rate, 30 to 40,000 customers per month. And that obviously also helps us to keep increasing our base of depositors. So these 3 things have really helped us to maintain a good rate of growth. Another thing in this context I would like to say is that we have brought down the share of bulk deposits in our book. With what was around 1,800 crores or so, we brought down to about 1,500 crores this March. And, actually switched it back into retail mode. So 91 to 92% of our base is currently retail. So these are some of the good things which have happened. Obviously, we continue to do what we do is doorstep services to customers, which I think is a big differentiator in terms of availability of service, accessibility to customers, going at their time of need and things like that. So some of these differentiators have made a difference. Yeah.
Thank you. Thank you, sir, for the detailed answer. I have one other question. How do you see the yield profile going forward? Will rising retail contribution lower our future yield?
Yeah, as long as the retail portion is catching up, there will be a slight moderation in the yield level, but it may not be very significant.
Okay. Thank you. That's it from my end.
Thank you. The next question is from the line of Pritesh Bam from DAM Capital. Please go ahead.
So one question was on the BC, number of BCs we've added. I noticed that it is now 35. So we were somewhere around 26 or something in the last 2-3 quarters. So which geographies we have added these BCs, and so is this for all MFI or any other products as well?
Yeah. Hi, Pritesh. So, good question, because as you know, the BC strategy is a very important part of the bank's plans, and BC channel is a major channel for distribution of our products and services. So that has continued to grow very strongly in the last financial year, and the 35 is the number you had mentioned. In terms of geography, as you know, in terms of the overall bank, we have always been concentrating north of the Vindhyas because, we are fairly strong in the south, especially in Kerala and Tamil Nadu. So in terms of expansion, these BCs we've been enrolling mainly in the north of India, states like Gujarat, Rajasthan, UP, Uttarakhand, West Bengal, Orissa, and Chhattisgarh. Now, the other thing is, we have never operated in Andhra, Telangana, the old Andhra Pradesh, what is now Andhra and Telangana. Last year, we, started operations in that area in terms of lending. Earlier, we had about 4 branches in Hyderabad and 3 or 4 branches in Andhra Pradesh. So that was basically from a liability point of view. Now we have started operations through BCs in the state of Andhra Pradesh and Telangana. We are steadily ramping up business there. So this is something which, in the last 30 years, in the entire history of ESAF, we have never been in Andhra. But now we see that the regulator, the government, everybody is kind of aligned, and the clarification has come in terms of how their outlook is, is on the microfinance sector. So we have entered that state also. In terms of what is the business that these BCs do, many of them do microfinance, but there are BCs whom we are using for agri finance, for MSME finance. A couple we are using in terms of two-wheelers and used cars. So it's a fairly broad area in which BCs operate, depending on their area of specialization. So about 50-60% is microfinance, the remaining is other areas of business.
Got it, sir. Thank you so much. Thank you for that answer.
Thank you. The next question is from the line of Tushar, an investor. Please go ahead.
Yeah, good afternoon, sir. Actually, sorry I missed your guidance on the credit cost. I want to know your guidance on credit cost for the future, sir.
Yeah, since the elevated level of stress is there in the system, which we have explained earlier, next 2 quarters also we see that there will be some elevated level of credit cost continuing.
Yes, Tushar. Participant got disconnected. In the interest of time, that will be the last question. I will now like to hand the conference over to Mr. Viral Sanklecha for closing comments. Over to you, sir.
I would like to thank the management for taking this time out for the conference call today, and also thanks to all the participants. If you have any queries, please feel free to contact us. We are Orient Capital Investor Relations Analyst Advisors to ESAF Small Finance Bank Limited. Thank you so much.
Thank you.
Thank you.
Thank you, Israel. Thank you all.
Thank you all. Thank you.
On behalf of ESAF Small Finance Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.